Welcome to our webinar entitled Latest BIR Issuances on Related Party Transactions. I am Attorney Arnold A. Apdua, and I will be glad to share my knowledge and experience regarding taxation to our fellow participants and viewers today. But before we proceed with the topic, I would like you to point your camera to the QR code in front of you. I know that taxation is a very interesting subject. It may not be that easy, and I believe it's better for us to learn it together. So I would like you to send any questions, clarifications, or comments regarding our topic through the contact details that you got. You can also send your request for any topic that you would like me to discuss aside from the topic that I have prepared for you. So, let us now proceed. As a background, in 2013, the Bureau of Internal Revenue issued Revenue Regulations 2-2013, which is the Transfer Pricing Guidelines. It was during the time of Commissioner Henares that this revenue regulation was issued. Bakit na-issue ito? Because of the dramatic increase in global trade that led to, take note, harmful tax practices of companies resulting to tremendous losses of tax revenues for governments. And what is that international tax issue emerging globally? That is transfer pricing. Let us look at the Philippine setting. For example, there could be a domestic transfer pricing issue kapag yung revenues are shifted, take note, in favor of a related company enjoying tax privileges such as Board of Investments incentives and Philippine Economic Zone Authority fiscal incentives. We all know naman kapag BOI or PEZA entity, it may enjoy income tax holiday, or for PEZA registered, after expiration ng income tax holiday, subject siya sa 5% preferential rate, which might probably lower than the corporate tax rate. So how does transfer pricing happen? For example, a related party corporation that is subject to corporate income tax would pass on its revenues or sales to BOI registered company in order to be exempt from income tax. So what would be the effect? Of course, there is lesser tax collection for the government, or wala talagang babayarang tax for the said transaction because it was protected by the incentive of the BOI or PEZA registered entity. And we know, for income tax holiday, it may be for 4 years, which may also be extended for expansion activities. Another scenario in terms of transfer pricing would be when expenses of a related company with special tax privilege such as BOI and PEZA entities would be shifted to a related company subject to regular income tax in order to minimize tax liabilities. What does it mean? As we all know, if the entity is under BOI or PEZA enjoying income tax holiday or even the 5% preferential rate, the operating expenses and administrative expenses may not be useful to them in terms of deductible expenses. But if they have related parties outside PEZA, okay, let's say located in Manila, not classified as PEZA, the operating and administrative expenses may be used or recognized by that Manila company to have lower taxable income subject to corporate income tax. It only means na pwedeng overclaim yung expenses ng taxable corporate entity because of the shifting of expenses from the BOI or PEZA-related entities. And that is what the BIR would like to avoid. In this Revenue Regulations 2-2013, the BIR would like to highlight the need to identify and determine if transactions between related companies are at arm's length. And these transfer pricing guidelines and methodologies are set by the BIR based on Organization for Economic Cooperation and Development Transfer Pricing Guidelines. It means that this has been a worldwide concern since there may be multinational companies who would be exploring the tax incentives of entities or lower tax rates of some countries to their advantage. A good example of that is the Philippines, that has the highest corporate tax rate in the ASEAN region, okay, at 30% as of January 31, 2021. And we do not know when the corporate tax rate will be reduced. Hopefully, few days or months from this webinar, it will be reduced by the CREATE bill turning into law. And compared with our neighbor country, Singapore, which has 17% corporate tax rate, which at times also gives tax rebates. So if you are an investor here in the Philippines, you would most likely look at the possibility of setting up a revenue-generating company in Singapore because it has a lower corporate tax rate rather than the Philippines, and set up a cost center in the Philippines. In this way, the tax liability is generally only in Singapore. So these are some of the strategies implemented by multinational companies in order to reduce the tax liability globally. Pwede natin sabihin na ang corporate tax rate in the Philippines is, for example, 30%. But the one earning the revenue is the company in Singapore, who may be claiming also the cost in the Philippines as part of its direct cost or deductible cost in Singapore. And in effect, it will only pay a lower amount of tax. But the company here in the Philippines is just a cost center. So walang masyadong tax na babayaran. So most taxpayers would ask, as to the transfer pricing, is the BIR allowed to do the transfer pricing guidelines? Siyempre pwede. The Commissioner of Internal Revenue may distribute a portion or allocate gross income or deductions between or among two or more organizations, trade, or businesses in order to determine, take note, the true income of any such organization. It means that the BIR may determine if transactions between related parties are truly justified and does not intend to evade payment of taxes. So it means that if you already filed your income tax return, the BIR may compare or determine the transactions with related parties if they are at arm's length. Like the example I mentioned earlier, na yung mga operating and administrative expenses may be shifted from one entity to another. Madali lang naman yun. For example, yung supplier of goods or services will be instructed to indicate the name of the taxable entity, and ang magbabayad naman is yung exempt corporation. In this scenario, makiklaim ng taxable entity yung expenses and would lower the net taxable income. That would definitely have an impact on the collection of the BIR from those entities. And what the BIR would like to adopt in determining transfer prices of related parties is through the use of the arm's length principle. We all know naman that in accounting, arm's length indicates that there was a transaction between two independent parties and that the resulting amount is a fair representation of the value. It only means na walang halong influence from any of the parties to reduce or overstate prices. That in case the same product will also be sold to another buyer or customer, independent of the related parties, it will be the same or similar price or gross profit margin. Bakit ito ang gusto i-establish ni BIR? Well, significant risks arise when related party transactions are not conducted at arm's length, and it may be used as a conduit to channel funds out of the company and even out of the Philippines into another related party, such as the risk of material misstatement in the financial statements as a result of inappropriate accounting. Take note, na di-distort yung presentation ng financial statements. Hindi na siya accurate. There is no clear-cut identification of the direct costs and revenues, and there is no proper matching. In short, pwedeng mas mababa ang makokolekt ng BIR because of the transfer pricing issues. Nawawala yung integrity ng financial statements, nababawasan pa yung possible collection ng BIR. Like what I have said, if the company will shift expenses in terms of costing dun sa domestic corporation outside PEZA, if they will agree to record direct costs and expenses ng PEZA entities enjoying income tax holiday, there will be material misstatement. In addition, the cost per unit, if it is a manufacturing company outside PEZA, nadi-distort din yung cost per unit ng mga products. It will not actually reflect the true cost and it will affect the decision of the management. Tatanong nila, bakit ang taas ng cost? Yung pala padded yung cost and expenses. There is a possibility for them to recover the cost but by increasing the prices of the products. Further, in these revenue regulations, it presented the guidelines on the application of the arm's length principle. This requires identification of comparable situations or transactions undertaken by independent parties or entities. It means that a study should be made where several subjects or data will be gathered and determine if specific transactions or data of other entities may be used to compare the transaction of the company being audited or studied. So there will be gathering and evaluation of data of the subject. Of course, there should be a reference as to the determination of transfer pricing, separate and independent of the company being audited or studied. It also requires analysis of the similarities and differences in the conditions and characteristics that are found in the associate enterprise transaction with those in an independent party transaction. It only means that hindi naman kagad magiging reference ng transfer pricing study yung two or more subjects without identifying yung similarities and differences ng mga entities. Let us always remember that the business entity may not be 100% replica or exactly the same as other entities. For example, Company A owns the building where it operates its grocery store, while Company B is operating also its grocery store but at the building owned by Company A. So, ibig sabihin si Company A nag-ooperate ng grocery sa kanyang building without rental expense, while Company B is also operating a grocery store but by renting a unit sa building ni Company A. Obviously, Company A may sell its products lower than Company B because it has lower overhead, while Company B may be forced to increase its prices to recover the rental expenses it incurred. So kung magkakaroon ng transfer pricing study by comparing similar industries, kasi yung industries ni Company A and B ay magkapareho, both operating grocery store, but the situation of A may be significantly different from B. Therefore, there should be a detailed study of the surrounding circumstances before determining the acceptable arm's length price or margin. In short, it's like doing a benchmarking of the gross profit rate but with in-depth study of the similarities and differences of the subjects. Also, in these revenue regulations, the BIR suggested a three-step approach in conducting the transfer pricing study. So this is the basic approach that everyone may adopt in transfer pricing. First, conduct a comparability analysis. So you try to look at the factors to determine if transfer pricing is possible. Ang rationale is for the comparability analysis is finding the most reliable comparables. Take note na yung comparability analysis is used to designate two distinct related analytical steps. First, there should be an understanding of economically significant relevant characteristics of the controlled transactions. Second, comparison between the conditions of the controlled transactions and conditions in transactions between independent enterprises taking place in similar circumstances. Ibig sabihin, you have to compare apples to apples as much as possible. Baka kasi magkaiba yung situation ng products or activities tapos yun ang gagamitin mo for setting arm's length transactions. The comparability factors may include, take note first, characteristics of the property or service transferred. Second, functions performed by the parties taking into account the assets employed and the risk assumed. In short, referred to as the functional analysis. You can also look at the contractual terms, economic circumstances, and business strategies pursued. Next step is the identity of the tested party. According naman sa OECD guidelines, the tested party is the one which a transfer pricing method can be applied in the most reliable manner and for which the most reliable comparable can be found. So it will often be the one that has the less complex functional analysis. So a tested party should have the following attributes kung sakasakali: availability of reliable and accurate data for comparison, the least complex, and data available can be used, take note, with minimal adjustments. And then after determining yung test party, now is the time you check the transfer pricing method used by the tested party. The transfer pricing method may include comparable uncontrolled price method, resale pricing method, cost plus method, profit split method, or transactional net profit margin method. So these are the common arm's length transfer pricing methodologies that you as an entity may adopt and apply with related parties. But what is the purpose of transfer pricing documentation? As provided by the revenue regulation, it is intended to explain to the Internal Revenue agencies such as the BIR that the related party transactions are not in any way influenced or manipulated, and therefore sales, direct costs, and expenses are properly declared between related parties. Pwedeng sabihin na hindi distorted ang financial statements. So tatandaan ninyo na ang purpose ng transfer pricing documentation is to prove kay tax examiner or auditor na hindi simulated yung mga transactions between related parties. That it is as if the parties involved are entirely independent from each other, and in case an outsider will transact with any of the parties, the margins or gross profit may be similar to what the other parties are enjoying. Let us now proceed with the recent revenue regulations of the BIR, which is Revenue Regulations 19-2020, which prescribes the new BIR Form 1709. But take note, this is the first revenue regulation issued in 2020, and we know that there are times that the revenue regulations are amended and refined in order to appropriately apply it to concerned taxpayers. But for now, we will discuss the provisions of Revenue Regulations 19-2020. Take note that the BIR issued Revenue Regulations 19-2020, which is intentionally to implement the transfer pricing issue that I previously discussed. It also prescribes the new BIR form to be used in declaring related party transactions. Before, the BIR required the submission of BIR Form number 1702H, known as the Information Return on Transactions with Related Foreign Persons. Also, this has been a concern of the BIR for the transactions of entities. It may not be completely and fairly presented in the AFS or audited financial statements and income tax returns. Thus, they require further disclosure. I remember, I was asked about family corporations. Usually kapag estate planning, the parents are already looking at the possibility of transferring their assets to their children. But their concern is how and when. One suggestion is to set up a corporation as holding company, and that holding company invests in different corporations that are also owned by the family. In this case, there is control over the corporations by the parent company. Pero syempre, that is where related party transactions come in. Is it arm's length? Kasi we have to consider that corporations are separate and distinct from each other, including its investors. Dapat hindi distorted or simulated yung mga transactions ng mga company. Also, take note that as provided by PAS 24, related party disclosures, there should be proper disclosures between entities. However, for tax purposes, using BIR Form number 1709, it requires full tax disclosure and sufficient documentation. In these revenue regulations, the BIR form should be attached to the annual income tax returns. It will also give the BIR revenue officers opportunity to gather information in determining whether revenues and expenses are accurate and not misstated due to related party transactions. So let's look at some definition of terms. First is an associate. It's an entity over which the investor has significant influence. So what do you mean significant influence? It is the power to participate in the operating and financial policy decisions of an entity. Pero tandaan nyo na ang significant influence is definitely different from control. If an investor holds at least 20% of the voting power of the corporation, the investor is presumed to have significant influence. But it does not necessarily mean na meron na kagad significant influence yung isang investor sa company. We still have to look at the surrounding circumstances. Pero what are the instances na mayroong significant influence yung person or entity? Normally, it has board of directors representation, management personnel swapping or sharing, material transactions with the investee, policy-making participation, and technical information exchanges. Another term, of course, close members of the family of a person. Okay? So these are family members who may be expected to influence or be influenced by that person in their dealings with the entity, and may include the person's children or spouse or domestic partner, the children of that person's spouse or domestic partner, and dependents of that person or that person's spouse or domestic partner. We also have to look into the compensation. Of course, it means all forms of consideration, whether money or in kind, or for the services rendered to the entity, including with the parent company. We also have control. Control naman means an entity owns over 50% of the company's equity. Note that for significant influence, which we discussed earlier, it means the entity owns between 20% to 50%. So these are also other terms that we have to consider regarding transfer pricing, such as joint control, which means the parties are sharing control, which exists only when decisions about the relevant activities require the unanimous consent of the parties sharing control. It means all should agree. While in joint venture naman means that the parties involved have rights to the net assets of the arrangement. Take note that a joint venture is a business arrangement in which two or more parties agree to pool their resources for the purpose of accomplishing a specific task. This task can be a new project or any other business activity. Each of the participants is responsible for the profits, losses, and costs associated with it. But when we talk about key management personnel, these are individuals who, in short, most of the time, captains of the ship as they set the direction of the business entity. They have the authority and responsibility to control the activities of the entity. We also have post-employment benefit plans that may be enjoyed by employees of related parties such as retirement benefits and post-employment benefits. Related party. Ano naman yung related party? It is the person or entity transacting with the reporting entity. But we have to qualify this reporting entity for BIR Form 1917-09 purposes. It is the one where the BIR has jurisdiction. It means nasa Philippines most of the time yung reporting entity. Kasi pag yung entity is outside of the Philippines at walang permanent establishment dito sa Philippines, it is not required to submit BIR Form 1709. While related party transaction refers to the transfer of resources, services, or obligations between a reporting entity and a related party, regardless of whether a price is charged. So it means whether monetary or non-monetary transactions, it should be disclosed. Okay? Significant influence? Well, we already discussed this one. Let us proceed with subsidiary, which is an entity that is controlled by another entity. It could be because the other entity 100% owns the subsidiary. Normally, holding companies or other big companies own 100% of the smaller companies, while venturer is a party to a joint venture and has joint control over that joint venture. A common joint venture in the Philippines is actually joint venture agreement for construction companies that may qualify for income tax exemption and creditable withholding tax only for the joint venture alone, but not individual capacities of the venturers. Okay? Revenue Regulations number 10-2012 actually provides that joint venture partners must be licensed local contractors and or foreign contractors with a special license as contractor by PCAB. Co-venturers are subject to tax, and the joint venture shall withhold the tax based on the net income of its co-venturers. We also have a person or a close member that person's family is related to a reporting entity. If that person first has control or joint control, has significant influence, or part of the key management personnel. It means even family members may be considered related party if it has control, significant influence, or part of the key management personnel. And the list of family members is not exhaustive and does not preclude other family members from being considered as close members of the family of a person, such as grandparents, parents. But you still have to assess based on specific facts and circumstances. This normally happens definitely kapag family corporations, where the patriarch or father or matriarch or mother started the business. Like in the case of SM, it was Henry C. who started the business, while for National Bookstore, it is Socorro Ramos, or usually called Nanay Coring. We also have related party when an entity is related to a reporting entity because the entity and the reporting entity are members of the same group. Let us say the Ayala Group of Companies. It has, Ayala Corporation, Ayala Land Incorporated, Bank of the Philippine Islands, okay? Or one entity is an associate or joint venture of the other entity. We know again that an associate is an entity over which an investor has significant influence. Also, other instances of related parties are, first, both entities are joint ventures of the same third party. Also, one entity is a joint venture of a third entity, and the other entity is an associate of the third entity. And last is the entity is a post-employment benefit plan for the benefit of employees of either the reporting entity or an entity related to the reporting entity. Note also na related party if the reporting entity is the plan itself. The sponsoring employees are also related to the reporting entity. I remember when I was still assigned as BIR examiner sa Manila, I checked some income tax returns of retirement plans. Di ba kapag may established and registered retirement plan ka, you still have to register that with the BIR and it must have its own team. Yung retirement plan is separate and distinct from the corporation or the taxpayer as to taxation. Pero as to retirement plan, make sure that the fund is used specifically for the benefit of the employees and not for other purposes. Isa sa mga requirements ng reasonable retirement plan is actually the corpus or the income of the trust fund must at time be used for the employees and not diverted to any purpose other than for the exclusive benefit of the officials or employees. Kasi minsan na-invest ng company sa ibang businesses. Another related party is that the entity is controlled or jointly controlled by a person identified or part of the close member of the family that has control, significant influence, or part of the key management personnel. And lastly, the entity or any member of a group provides key management personnel services to the reporting entity or to the parent of the reporting entity. So, let us now talk about related party transactions. Ano ba yung mga transactions that a reporting entity has to disclose sa BIR Form 1709 and transfer pricing documentation? Note that it shall include but not limited to the following. Siyempre, a good example of this is when trading company A sells computers to its sister company engaged in providing, for example, back office services to its associates, subsidiaries, and related parties. So this refers to the tangible assets transferred from one company to another. It could also be raw materials sold by importer to a manufacturing company, where these companies are owned by a holding company. Second is purchases of sales of property and other assets. A good example of this is real property such as land and buildings sold to another entity or individuals which are related parties. Third is rendering or receiving of services. This is very common din sa related party transactions which may include yung management fees imposed by the parent company. Pero pwede din yung mga qualifying services, for example, ng regional operating headquarters sa mga branches, affiliates, and subsidiaries in the Asia-Pacific region and other foreign markets. So what are those qualifying services? Well, first is general administration and planning. Second, business planning and coordination. Sourcing, procurement of raw materials, components, corporate finance advisory services, and marketing control and sales promotion. That is specifically for ROHQ. We also have leases. This is common also sa mga multinational companies, especially if may real property such as land or building owned by a related party. Even accommodations made sa mga resorts or hotels operated by another related party. Or in case of hotel, operating on the land of another company. So this has to be disclosed in BIR Form 1709. We also have transfers of research and development. This is a situation where the parent company or sister companies may allocate the expenses incurred for research and development. We also have transfers under license agreement. In this case, it is common that companies establish madalas fixed sales-based royalties for their intra-group licensing of intangibles. Pero these are cases that yung appropriateness of royalty rates is defended by internal or let's say external, comparable, uncontrolled through database benchmarking. We also have transfers under finance arrangements including loans and equity contributions in cash or in kind. This case naman is of course advances to and from related parties or even shareholders in the form of money. These are cases that parent companies borrow money from banks and financial institutions. And then yung proceeds, pwedeng ipahiram sa mga smaller and newer companies in the group without interest. So this may also affect yung recognition of interest ni parent company. We also have provision of guarantees or collateral. This is a case where a parent or sister company guarantee the loans of related parties, but they also charge guarantees fees to its subsidiaries. In this case, we need to check if it is arm's length. We also have commitments to do something if a particular event occurs or does not occur in the future, including executory contracts. So, what are executory contracts? These are contracts under which neither party has performed any of its obligations or both parties have partially performed their obligations to an equal extent. Lastly, there is the settlement of liabilities on behalf of the entity or by the entity on behalf of that related party. This is a situation where a parent or related party pays for on behalf of the borrower, which is a related party. So in this case, remember that the disclosures on the transaction itself and the outstanding balances shall be made separately for each of the following categories. Ibig sabihin, kanya-kanyang disclosure ng mga transactions by the parent company, entities with joint control or significant influence over the entity, and subsidiaries. We also have the associates, okay? Kailangan mag-disclose joint ventures in which the entity is a joint venturer, key management personnel, and other related parties. I remember when I was still an examiner, I audited a particular taxpayer. It's a financing company and it has related parties. So when I audited the FS and notes financial statements, I saw that there were disclosures ng related party transactions. There are advances to and from related parties. And the thing that I did to check the validity of such transactions is to look at the audited financial statements and notes to financial statements ng related parties. Surprisingly, hindi match or bangga yung disclosure ng taxpayer being audited with the related party, when in fact, it should be equal. Also, remember not to offset accounts receivable and payable immediately between related parties without reconciliation and disclosure with the other parties, as this will result definitely to discrepancies. But I would suggest that if the group of companies would like to have a systematic accounting system, they can have an enterprise resource planning system that would help them consolidate its transactions in real time. Well, a good example of that definitely is Oracle NetSuite. And for each of said category, the taxpayer should also disclose the following. Okay? You have to disclose the amount of the transactions, the amount of outstanding balances, including commitments and their terms and conditions, including whether they are secured and the nature of the consideration to be provided in settlement, and the details of any guarantees given or received. We also have to disclose the provisions for doubtful debts related to the amount of outstanding balances and also the expense recognized during the period in respect of bad or doubtful debts due from related parties. Note that there are cases where accounts receivables are written off by related parties and claimed as deductible expenses. But take note, under the tax code, kapag related parties, there are cases that doubtful accounts are non-deductible, most especially when a corporation owns more than 50% of the other company. So what should be done in filling out BIR Form number 1709? Remember to observe the following. First, the BIR Form number 1709 shall be completely and truthfully accomplished by the taxpayer or its authorized representatives, and it shall be attached to the income tax returns for the current taxable year and the subsequent years, making it an integral part of the latter. So it means that the taxpayer has now an additional task of submitting the BIR Form 1709 aside from the audited FS attached to the income tax return. Second, the nature of the transaction and the accounts affected shall be described in detail. It means that there should be complete disclosure of the transactions. The taxpayer should also disclose the business overview of the ultimate parent company. It shall include the profile of the multinational group of which the taxpayer belongs, along with the name, address, legal status, and country of tax residence of each of the related parties, with whom intra-group transactions have been entered into by the taxpayer, and ownership linkages among them. But most of the information required here is actually readily available when the taxpayer prepares its notes to financial statement, specifically the company information, indicating the parent company. So it means the taxpayer just have to lift actually this information from the notes. The taxpayer has to disclose also the functional profile of the taxpayer. This is a broad description of the taxpayer and the industry in which it operates, and of the business of the related parties with whom the taxpayer has transacted. This means that you have to provide also an overview of the kind of business the related parties have. As provided by Revenue Regulations 19-2020, specifically Revenue Regulations 19-2020, these are the documents to be attached to BIR Form 1709, a certified true copy of the relevant contracts or proof of transaction. But actually, this has to be reviewed, of course, by the BIR. If the contracts involve trade secrets and practices of the companies and let's say was subsequently lost during submission or a competitor gets hold of this contract, it will affect actually the business dealings ng taxpayer. So this has to be reviewed. This may involve voluminous documents also, which the taxpayer has to produce and shoulder the cost. Also, you have to attach the withholding tax returns and the corresponding proof of payment of taxes withheld and remitted to the BIR, and proof of payment of foreign taxes or ruling duly issued by the foreign tax authority where the other party is a resident. The taxpayer also has to attach a certified true copy of advance pricing agreement, if any, and any transfer pricing documentation. And what is this transfer pricing documentation? This is normally a study conducted by independent and consulting firms in order to avoid bias. It will include study of the comparables, tested parties, and determine if the transactions are at arm's length. But make sure that the taxpayer has sufficient data in order to conduct the transfer pricing documentation. That is why, in our case, we usually evaluate the availability of documents and data of certain taxpayer as we conduct our transfer pricing study. But take note that this is based on Revenue Regulations 19-2020, which actually the first revenue regulation issued in 2020. And we know that in case of BIR issuances, there are times it is refined and modified through issuance of another policy or regulations from the BIR. So it means that this may be modified. Let us now proceed with RMC or Revenue Memorandum Circular 76-2020, which clarifies certain issues of the filing of BIR Form number 1709 or the Related Party Transactions Form and its attachments. This RMC is in relation to Revenue Regulations 19-2020, which requires the Related Party Transaction Form is to be completed by Philippine taxpayers. With related party transactions, take note regardless of the amount and volume of transactions. This RMC also requires individuals considered as related parties of a reporting entity to submit the Related Party Transactions Form in their individual capacities. It means that the coverage of this BIR Form number 1709 is broad to cover almost all persons or individuals that are considered related party, whether the transaction is material or insignificant. The RMC also provides that the Related Party Transaction Form is to be submitted as an attachment to the annual income tax return for fiscal year ending March 31, 2020, and all annual income tax returns to be submitted after such date. And the BIR considered that the attachments are voluminous and may not be transmitted or filed electronically. Thus, the BIR requires that the Related Party Transaction Form to be manually filed. However, there is a possibility that the BIR may issue another issuance after configuring their system to mandate the filing of the Related Party Transaction Form electronically. But we know naman that this will require additional IT infrastructure or storage on the part of the BIR. We still have to know if the cost of setting up a storage for this related party transaction will generate more taxes for the government. So let us now proceed with the transfer pricing documentation. As you engage firms such as auditing or consultancy firms for the transfer pricing documentation, always remember that the transfer pricing documentation should be prepared prior to or at the time of the transaction or after the transaction, but not later than the date of filing of the tax return in which the transaction took place. This means that before you submit the income tax return, you should have already conducted the transfer pricing documentation. However, we might say that for 2020 and 2021, it may be difficult to identify arm's length transaction if companies are placed in different situations, most especially because of COVID-19. We all know that some are still under work from home scheme, while others try to report to the office 100% workforce. In this case, comparables and tested party may have to be evaluated carefully unless almost all factors are similar. So some of the taxpayers would ask, is the transfer pricing documentation required to be updated yearly? Because this would be an additional cost under tax compliance. Actually, if there are significant changes in the business model, the factors or conditions considered in drafting the transfer pricing documentation and the nature of the related party transactions, then the transfer pricing documentation has to be updated. A good example of this is kapag nagkaroon ng significant change with the owners of the reporting entity. What does it mean? If the holding company that previously owned the reporting entity already sold its shares to new stockholders, and the pricing structure and business model of the new stockholders are entirely different from the previous stockholder, then they have to update the transfer pricing documentation. Pero kung wala namang significant change sa transfer pricing practice, the reporting entity does not need to update the transfer pricing documentation. So remember that the intention of Revenue Regulation 19-2020 is to have full disclosure of all related party transactions, whether a price is charged. But as reminder, Revenue Regulations 19-2020 was the first issuance in 2020 regarding transfer pricing. The BIR has issued other policies regarding transfer pricing that would affect taxpayers' compliance. As mentioned by this RMC, all contracts are required to be attached regardless of volume to substantiate the related party transactions in the taxable year concerned, and as you prepare the transfer pricing documentation. But as I mentioned earlier, this will probably expose the reporting entity of its trade secrets and business practices in case these contracts are lost or seen by competitors. But what are the penalties to be imposed in case the BIR discovered that the reporting entity has failed to comply with the rules on BIR Form 1709? The first offense is 1,000 but not to exceed 25,000 pesos during the calendar year. For the second offense and subsequent offenses, the penalty is a maximum of 25,000. But in case the BIR requires the taxpayer to submit the transfer pricing documentation through a subpoena duces tecum and the taxpayer fails to obey with the summons, it says that upon conviction, it means there was already court proceedings and the taxpayer is found to have violated the subpoena duces tecum, the taxpayer will be punished by a fine of not less than 5,000 pesos but not more than 10,000 pesos, and suffer imprisonment of not less than 1 year but not more than 2 years. So we also remember that the BIR requires that non-stock non-profit corporations or organizations with related party transactions to submit the BIR Form 1709. It is a fact that there are companies that have their foundations as part of the corporate social responsibility. It means that if they want to have charitable events or activities, these companies can do it through the foundations that they established. And as we all know, in case the foundation is accredited by PCNC, all donations to such foundation is 100% fully tax deductible on the part of the donor. But there are times, of course, such practices result to abuse or intentional evasion of payment of taxes. That is the reason why the BIR requires non-stock non-profit organizations with related party transactions to submit the BIR Form 1709. So let us now proceed with another revenue regulation issued by the BIR regarding transfer pricing. This is Revenue Regulations 34-2020, which prescribes additional guidelines and procedures on the submission of BIR Form number 1709. We all know that there are policies that the BIR have to review and refine, including how taxpayers would comply with the BIR rules. And in this case, we will see additional changes or improvements on the previously issued Revenue Regulations 19-2020. Remember that the related party transaction form and its attachments will be used by the BIR during the transfer pricing risk assessment. Ang intention is to determine whether or not to conduct a thorough review or audit of a particular entity or transaction. Baka kasi may material misstatements sa mga transactions between related parties. But we have to take into account the mandate of the Ease of Doing Business and Efficient Government Service Delivery Act of 2018, especially during the COVID-19 pandemic. That is the reason why the BIR revised the guidelines and procedures for the submission of BIR Form 1709, transfer pricing documentation, and other supporting documents by providing safe harbors and materiality thresholds. In the previously Revenue Regulations 19-2020, take note, it requires all taxpayers with related party transactions to submit BIR Form 1709, including submission of the contracts and transfer pricing documentation, regardless whether an amount is charged or not. But with Revenue Regulations 34-2020, the following are required to submit the BIR Form 1709. First is large taxpayers. Second is taxpayers enjoying income tax incentives or fiscal incentives. Okay? These are most of the times the target of the BIR to determine if the revenues, direct costs, and expenses are correctly declared because the incentives may be abused or incorrectly applied. We also have taxpayers reporting net operating losses for the current taxable year and the immediately preceding 2 consecutive taxable years. This is also a red flag kay BIR. Baka kasi the reason of successive losses is yung mga claimed direct costs and expenses from other related parties. So parang nasi-share yung expenses. Also, yung related party na nagkaroon ng transaction with what I have discussed such as large taxpayer, BOI or PEZA registered entity, and taxpayers that incurred net operating losses will have to submit the BIR Form 1709. Pero yung key management personnel previously discussed sa Revenue Regulations 19-2020 are no longer required to file and submit the related party transaction form. And we do not need to report any transaction between key management personnel and the reporting entity sa BIR Form 1709. We know naman kasi the key management personnel is already included naman sa disclosure ng notes to financial statements. But what if the taxpayer has decided to close its business during the middle part of 2021? Are they required to submit the BIR Form 1709? Well, if they had related party transactions, of course, the answer is yes. As provided by Revenue Regulations number 34-2020, when short-period annual income tax returns are required by law or existing issuances to be filed, the related party transaction form must be submitted. But this one will be mandatory for short-period returns filed in 2021 and subsequent years. It means prospective ang requirement ng Revenue Regulations 34-2020. And we also have discussed in Revenue Regulations 19-2020, there should be transfer pricing documentation, which would require study of the comparables, tested party, and determine if there is arm's length transaction. But it was also revised by Revenue Regulations 34-2020. So this is separate from BIR Form 1709, yung transfer pricing documentation. Kasi kapag yung taxpayer is large taxpayer, BOI, PEZA, registered entity, or that incurred losses and its related parties, they have to submit the BIR Form 1709. But for the said taxpayers, they are required to submit the additional requirement na transfer pricing documentation if they reach the following thresholds. It means kapag below sa threshold, no need for transfer pricing documentation. First is kapag yung annual gross sales or revenue for the subject taxable period exceeded 150 million and the amount or its aggregate transactions of related party transactions with foreign and domestic related parties exceeded 90 million pesos. Okay? That's the time they are required to submit the transfer pricing documentation. But the threshold that I mentioned earlier na over 90 million transactions was also qualified pa. Ang ibig sabihin nun, in computing the threshold, the items to be included are the, take note, amounts received and or receivable from related parties or paid and or payable to related parties during the taxable year and outstanding balances of loans and non-trade amounts due from to all related parties. Pero remember to remove the compensation paid to key management personnel, dividends, and branch profit remittances sa computed threshold. It means this should be excluded or hindi kasama sa materiality computation. Also, kapag may related party transactions na covered ng advanced pricing agreement, the taxpayer does not need to disclose that in the related party transaction form. But it must be included naman in the computation of the amount of related party transactions using the prescribed formula na binanggit about the threshold. Earlier, the threshold are the aggregate sales revenues, which is 150 million, and aggregate foreign and domestic transaction of 90 million. But the related or specific transactions to be disclosed and included in the transfer pricing documentation are the following. First, are those with aggregate sale of tangible goods exceeding 60 million pesos within the taxable year. Ibig sabihin nun, kapag over 60 million yung sale of tangible goods ng reporting entity with related party, it must have transfer pricing documentation. Second is yung mga service transactions, payment of interest, utilization of intangible goods, or other related party transaction exceeding 15 million pesos within the taxable year. And those taxpayers that were previously required to submit transfer pricing documentation for the immediately preceding taxable year should also submit this transfer pricing documentation. But as a reminder, according to Revenue Regulations 34-2020, the transfer pricing documentations and other supporting documents such as contracts, invoices, and receipts na required to be attached to BIR Form 1709 na ni-require ng Revenue Regulations 19-2020, take note, shall no longer be attached to the BIR Form 1709 form. Remember that these are voluminous documents. What the BIR now requires is that, first, the transfer pricing and supporting documents should be submitted within 30 calendar days from the request by the Commissioner or his duly authorized representatives. Okay? But second, remember it should be in relation to a duly issued letter of authority covering all internal revenue taxes. It means that there is an assigned revenue officer who is conducting the audit of all internal revenue taxes of a taxpayer for a particular taxable year. The submission of the transfer pricing documentation and supporting documents may actually be extended to another 30 calendar days based on meritorious grounds. If you are not familiar how does the BIR conduct an audit, we have another video for that particular topic. But take note, as I mentioned earlier, regarding the transfer pricing documentation, it should be done or conducted before the filing of the income tax return. It means ready na dapat yung transfer pricing documentation before filing the ITR kahit hindi pa kayo na-audit ni BIR. But what if the taxpayer is not covered sa transfer pricing documentation and other supporting documents? What they have to do is to disclose that in the notes to financial statements that they are not covered by the requirements and procedures for related party transactions. It means proper disclosure lang sa notes to financial statements. And lastly, as provided by Revenue Regulations 34-2020, if there are provisions of Revenue Regulations 19-2020, RMC 76-2020, and other relevant issuances that are inconsistent with Revenue Regulations 34-2020, they are repealed, amended, or modified accordingly. It only means that the prevailing rule and policy about transfer pricing is Revenue Regulations 34-2020. If there are provisions in previously issued Revenue Regulations na consistent naman with RR 34-2020, it will still be implemented. But this is also subject to change or modification based on future issuances of the BIR. So let us have a glimpse of the BIR Form 1709, December 2020 version. This is the first part of the BIR Form 1709 wherein you will indicate the general information such as the taxable year, the TIN of the taxpayer, the RDO code, and the basic information of the taxpayer. The next part is actually the details of the related parties. This is the part wherein the foreign related parties should be disclosed as to its name, nature of relationship, country of residence, foreign TIN, local TIN if there's any, and then there's a question whether there's a permanent establishment in the Philippines or not. And we have to indicate also the TIN of the permanent establishment. We also have these domestic related parties wherein you have to indicate the name, nature of relationship, the TIN, and the registered address. This part shows the related party transactions itself. Okay, you have to indicate here on this part the sale of goods and provisions of services of the reporting entity. You have to indicate the name of the related party, description and type of transaction, the amount in foreign currency, the amount in Philippine peso, and there's a question whether you were granted tax treaty benefit in the source country and also income tax withheld by the income payer. The next part is the purchase of goods and services, but you have to exclude the key management personnel transaction. In this part, you have to indicate the name of the related party, description and type of transactions, the amount in foreign currency and in Philippine peso, and you have to indicate also whether the recipient of that purchase of goods and services claimed tax treaty benefit. Was there also a tax treaty relief application filed with the BIR? And how much tax withheld by the taxpayer? And is the income attributable to permanent establishment? This part is the disclosure of loans granted to or non-trade receivable from related parties. Take note that this is more on the monetary accommodations made between related parties, because if the transaction involves sale of goods or services, it will be disclosed in the previous section. This section requires disclosure of the opening balance of the loan, amounts granted during the taxable year as to its loan. Kasi normally sa notes to financial statements, hindi na ilalagay yung buong loans granted for the entire year. Kaya yung computation of DST is incomplete. You also have to disclose the terms and conditions, outstanding balance as of the end of the taxable year. You also have to disclose the provisions for doubtful debts and the bad debts recognized during the year. But take note, under the tax code, there are times related party transactions such as bad debts, most of the time not deductible. We also have this part wherein loans received from or non-trade payable to related parties. This is more on the again, the monetary consideration or accommodation made between related parties. This section requires disclosure of the opening balance, loans received during the taxable year, and terms and conditions, and the outstanding balance as of the end of the taxable year. And this part requires the taxpayer or the reporting entity to disclose other related party transactions, but you have to exclude compensation paid to key management personnel, dividends, and branch profit remittances. This is the part as to the additional disclosure wherein you have to indicate the brief business overview of the ultimate and immediate parent of the taxpayer, the brief business overview or functional profile of the taxpayer. There's also a question of is there any change in the functional profile of the reporting entity during the taxable year. There's also a question as to the change as to the ownership structure during the taxable year. If you can recall on our discussion earlier, are you required to submit or to update transfer pricing documentation? Well, it depends. If there's a change as to the ownership structure, then you have to submit updated transfer pricing documentation. And then here, did you undergo business restructuring during the taxable period or for the last 5 years? You have to answer that also. And this is the last part wherein you will be asked if you have prepared a transfer pricing documentation for the related party transaction. As mentioned earlier, you must have accomplished the transfer pricing documentation before the filing of the income tax return. If you have not prepared yet this requirement, it is advised to obtain the services of a consulting or professional firm in doing the transfer pricing documentation. It also requires the reporting entity to disclose if there are pending applications for tax treaty relief with the BIR or other tax authority. Last question on this part is it requires you to answer if there is an advanced pricing arrangement with related party. The bottom portion requires you to sign the BIR Form 1709, declaring that you prepared the form in good faith, an undertaking to submit the transfer pricing documentation during the audit, and consent under the Data Privacy Act. There is also a portion of the tax agent accreditation information. So that covers our discussion about BIR Form 1709 in relation to transfer pricing issues and compliance. I hope you learned a lot from our discussion. If you have further questions or clarifications regarding transfer pricing, you can contact us and we will be glad to assist your transfer pricing concerns. Thank you very much. This is Attorney Arnold A. Apdua, CPA. I hope to see you in our next videos. Keep safe and God bless. Bye-bye.